Today's interview is with Mitch Jarkowski. Mitch is a real fun guy who's done a lot of different types of investing. He's invested in stocks, done some day trading, currently in some crypto. He's done some Forex, but mainly also he invests in real estate. Real estate and cryptos, that's where his main investments is. So he talks about all those different investments, why he likes real estate the most. So if you're interested in any of that, and even if you're not, you should stick around for all of today's interview. As always, like and subscribe on Wrestling with Real Estate, the YouTube channel. Go to the WWRE Podcast and give me a 5-star rating and write me a review, please. It helps us get bigger and better guests and grow the show. And I'm looking to speak to as many of you as possible. If you're interested in real estate, I'd love to speak to you. So there's going to be a link in the description down below, or you can go to wrestlingwithrealestate.com and sign up there. We can get on a call and talk and get to know each other, see if there's any way I can help you. But before that, make sure you stick around for all of today's great interview with Mitch Jarkowski. Welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler, and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Mitch. How are you doing, Mitch?
I'm doing awesome, man. Happy to be here talking to you.
I'm happy that you're here as well, man. We were just talking before, man. It's going to be a fun conversation, no doubt about that. Before we jump into it, and who knows where we'll go with the conversation, that's going to be the exciting part of it. Do you want to give us a little bit about your background, what you've been up to, and what you're up to right now?
Yeah, 100%. Full-time real estate investor. I went full-time back in 2017. I was working, I was a day trader for many, many years, and then I was doing consulting work in like IT finance. So that finished, I had a gig end in 2017, and I was just like, you know what, now's the time to go full time. You know, it's like, I don't know if I had enough rentals at the point to do it, but I was like, we're doing it. So I've been full-time investing in real estate. I dabble in some other stuff too, between stocks still and cryptocurrency, but real estate's my main thing. I also launched the Scaredy Cat Guide brand you see there. And published a book in 2017, kind of a newbie book for, rental property investors, Scaredy Cat Guide to Investing in Rental Properties. And then just been going from there, building portfolio, networking, investing in different places. When I first started investing, I was such a scaredy cat that my first 2 properties I purchased were literally within a 1.5 mile radius of where I lived. Like I needed to be able to just drive by them anytime, which makes 0 sense. And now, over the last few years, it's been all out-of-state investing. Bought stuff essentially sight unseen. With partners just kind of looking at it for me. Boots on the ground is always great in other locations, and it's just crazy how it's involved. So I spend time, doing that, working on deal flow, looking for new deals, and helping new real estate investors kind of get educated and know how to buy right, essentially.
There's a lot of good stuff there, but let's go back even further, right? So you grew up in, where did you grow up in? What was, what did you go to school? Why did you go that avenue? Like all that.
It's funny. I'm a complete, I guess, black sheep in my family because there's no real investors in my family. In fact, no one outside of my grandfather even owns their own home in my family. So I definitely, sat out on a different path. I grew up Long Island, New York, and pretty much spent childhood there. I went to college in New York and briefly in Massachusetts to play basketball. And then about a year or 2 after I graduated college, I decided that I was going to make a move, and I got a job offer I couldn't really say no to down in South Florida. So that took me to sunny Florida. And as soon as I got used to those warm winters, that was it. I was never going back. I love my New Yorkers, but sorry, you're on your own. Come down. It's warm here. And I was in corporate finance right out of college. and not enjoying it. And that's what led me to the job change in Florida, which was still in corporate finance, but I realized it wasn't the job in New York I didn't like. It was sitting in a cubicle that I didn't like. So after doing that for about 1.5 years in Florida, that's when I ventured out into day trading, because I got hooked on the stock market when I was 18 years old. A friend gave me a book called Rolling Stocks, and it basically just taught you how to like find stocks that were like in a sideways trend, like just, not really going anything but up and down. And then you kind of trade it back and forth. And I was hooked. That was it. So I started dabbling on the market at that point. I guess I was, a hobby trader. And I guess finally I decided that was my quote unquote calling. So when I left the corporate finance job, I day traded full time at a prop desk. So basically all that is a firm where, you get your license. Back then it was a Series 7 you needed to get. There's a separate one now that's just for trading. I forget what number it is. But you get your license, you put up a little bit of capital. They'd give you whatever it was, like 50-to-1 leverage. So you could day trade. And, I day traded at a firm for over the course of like 5 to 6 years. There was some breaks in between. And I just got to the point where I was getting burnt out. Like day trading is like psychological warfare. It really is. Like I tell anyone, I'm like, if you want to test yourself mentally, go ahead, become a day trader. Because I've done a lot of things in life, and that thing, like it's the market will test you. Oh my God, psychologically it will test you. So I started getting burnt out from that. And I had a buddy that just kept telling me, he's like, dude, I'm telling you, buy some real estate. And this was in like 2010, 2011. Oh, wow. And I didn't listen to him. Right? Mistake number one. Why did I not listen to that guy? It was like fish in a barrel in South Florida, buying real estate in 2010. I mean, you were basically buying lotto tickets that you knew were going to win. I kept fighting with trading a little while longer. And then I stumbled back into doing some consulting in my old line of work because they were basically letting me work from home. So it gave me the freedom to still, trade and whatnot. And so I finally listened and started looking at real estate in 2013. And it was early 2014 when I finally closed on my first property, and I haven't looked back since. And I can tell you this, hands down, real estate is the best investment there is. I've day traded, I've invested in precious metals, I've traded Forex, I've done options. I mean, heck, I'm into cryptocurrency. In the end, real estate is by far the best investment because you have the most control over it. You know what I mean? You have the most control over your outcome on whether things are going to go good or bad. And especially with rental properties, right? Like you make money in multiple ways. Like you build wealth in multiple ways. Like everyone's like, oh, I want to get cash flow. I'm like, cash flow is great, but that's only like one way out of 4 that benefit you. Like you get principal pay down, like someone else is paying your mortgage, building equity for you, right? It's just like there's the chance of appreciation, which, isn't guaranteed, but if you buy right, usually you're in good shape. And then the tax benefits, like where else are you going to be able to essentially not pay a ton of taxes on your income? I mean, if I sell a stock, or if I'm collecting dividends on my stock, like I have to pay taxes on that. There's no expenses to write off. Like there's no depreciation. So, I mean, moral of that story is I wish I just would have started so much sooner.
Well, I think, that goes for all of us, I think, right? There's not a real estate investor alive that's like, oh, I don't wish I started earlier. It's just
right. You know what, Barry, what's the saying? It's you don't wait to buy real estate, you buy real estate and wait.
Yeah, so true. But I always say that I think real estate is the best investment, but I'm not that qualified because I've only ever really invested in real estate. But it's so cool to hear you talk about it because you've invested in all this other stuff, right? And I'm guessing being quite successful at it. If you were a day trader for that long, I can't imagine that you were too bad at it, and you've done all this other stuff.
I mean, I got by,
Right.
it was that was the thing. I mean, it's like a lot of things you see in a lot of fields. It's just like 2% of the people are making like the big money. Mm-hmm. And then you got like all the other people that are just getting by, and then you got all the people that are burning out. I admittedly was one of those people that was just getting by. It was like, it was cool. Like, that's what I could do for a living and I could pay my bills, but I wasn't building wealth. You know what I mean? I was grinding, and that's what it became, a job. And I was just like, all right, no, like, I need passive income. And in real estate, like, that's where it's at when it comes to passive income. So
what does it like? So I always hear people that talk, I know people that day trade and have done it, and they all say the same thing, right? It's really, really stressful, right? It's just hard mentally because, well, I don't know why. Maybe you can. So for one, tell us what does a day look like for you as a day trader, or it did look like, and then why is it so stressful?
So I'll give you a quote that actually will probably answer most of this, and it's one of my favorite mantras when it comes to investing in the stock market, period. And this holds true for almost any market, whether it's cryptocurrency, whether it's Forex, whether it's even like, gold and silver. And it's a quote that says, "The market can stay irrational longer than you can stay solvent." It is my favorite mantra in investing in anything that's a speculative market. And it's so true. And to give you an example of how that plays out, like, look at the stock market right now. I know people that are still day trading for a living, and a lot of them got their ass handed to them trying to short the market because it really makes no sense that the market keeps going up right now. Like, 0 sense. But it doesn't have to. Like, it can be illogical, it can be irrational, and it can do it until you go broke. And I'll openly admit, like, I still, trade here and there a little bit. And I fought the market most of this year trying to short the S&P 500. Like, this is ridiculous. We're going to get a pullback. We're going to get a pull. And nope, just keeps going up. Nope, just keeps going. And I was like, all right, well, I guess that's just me hedging all my long-term stuff. Cause I still have like an IRA with stocks in it. So like, I'm long the market, but short-term I was trying to short it, and I kept basically getting hit over the head. And then you want to lose your mind. You're like, this makes no sense. Unemployment's like 15%. No one's worried. Like,
I was blown away. So it's, for people know, it's November 24th today, right? The Dow hit 30,000 today. I don't invest zero in stocks, and this is why. I would be looking at, even if I bought an index and I was looking long term, I'd have to look at it every day. I just know myself, and I know it would just be so painful for me. And so like right now, if I owned it, would be great. But at the same time, at some point, you imagine it's going to go down or whatever. But anyway, but it's hit 30, like you said, unemployment is super high. Like there's more coronavirus cases every single day. We're heading into more of a lockdown. The damage from the initial lockdown hasn't been assessed or evaluated or hit yet. But yeah, it's 30,000. And like, okay, I get people say the stock market isn't the economy, right? But at some point, there's got to be a correlation at some point. So
at least somewhat, yeah. So I think right now probably is the biggest disconnect between the stock market and the economy I've seen in the it's been 22 years now since I started like watching the market. And you can go down a whole rabbit hole about why it's doing what it's doing, and obviously you got the Fed pumped $7 trillion into the economy with the first stimulus, and everyone's expecting another one, which is probably why the market's still like high, because they're anticipating that we're going to get trillions of dollars from the government, which is great. But I'm like, all right, that's all debt. Apparently we never have to pay back debt ever. Like, I don't know. I'm an old school fundamentalist, so I'll start sounding like a 75-year-old grumpy man if we really get into this. But yeah, so it can be, and that's the whole thing. So it can be frustrating because as you're trading, if you're trying to trade based off fundamentals, it's like, well, this doesn't make sense. And then it's like, so you feel like you're beating your head against the wall. And then also just the way stocks trade now, especially with all the algorithms and the black boxes, it's like you're trading against computers now even. And it's just like, so you'll see stuff that, a stock is trending and out of nowhere, it just like has this quick dip, spikes through a level, stops everyone out, and then starts ripping again. And it's like, and you get caught in that. So it's just, it's like getting, thrown around in the ring. You're bouncing off of ropes and your head's on a swivel. And so picture that. I know you can picture that. So that's what it's like psychologically, day trading stocks.
Okay. You're getting bounced all over the ring. Yeah, that makes sense. So you also mentioned that you traded Forex. How do Forex work? Like, I know this is a real estate show, but for people that are interested.
So I mean, I will admit, like, that's the that everything I got involved in, that's probably the thing I dabbled in the least. But really with Forex, what you got to pay attention to is basically it's 24/7 trading. You know, it's not like the stock market where you have market hours. And with that, actually, I think the reason why I know some Forex traders that are still trading, and I think they do better than equity day traders because there's actually a little more rhyme or reason to it. Because, you know, you're basically trading currency pairs against each other, and there's clear catalysts usually on why a currency is going to get pushed up or down. I mean, you know, when the Fed comes out and, you know, says XYZ, it's just like, right, you can anticipate what the currency is going to do based on that. So I think it's just, I don't want to say it's more controlled, but I think you can use technicals and just theory a lot better than you can with equities, where not only is that being pushed around by the overall market, it's also being pushed around by that individual stock and what like a random analyst comes out with and says, you know, on a random day. So it's just, to me, it's a more controlled environment, which almost seems counterintuitive because it's 24/7. But I just think there's less variables, and you can basically find the catalysts that you can trade off of. And then also even like the longer term trends, you know what I mean? Like when you see the US dollar versus the Aussie dollar is actually something I paid attention to a lot. And that was probably because I'd spent some time in Australia years ago and I loved it. So I guess I just kind of stayed honed in on it. And, you know, there were clear trends that were going on with those currencies, and they seem to last for a good amount of time, whether it's months or years. And then it'll take, you know, some kind of big policy change for it to change direction. So I think that's why people can have more success with it, because there's just a little more clarity or rhyme and reason to it, as opposed to stocks where you're literally just getting bounced around, it seems like, most of the time, even within like clear trends, so to speak.
Yeah, that's interesting. That's interesting. All this is kind of foreign to me. I've always just been in real estate, so I don't know what's good.
You're better off, man. Just stay focused.
I'm not smart enough to do any of that stuff.
Neither am I.
And then finally, before we get into the real estate, that's where the meat of this conversation will probably go. You mentioned cryptos there, and that, you know, that's kind of a crazy world to me as well. So, you know, are you pretty active in that? Like, and talk to us a little bit of your thoughts about crypto as well.
So I always joke. I say that I'm a real estate investor with a crypto problem. I will, like, honestly, I'm just as busy with my cryptocurrency and my cryptocurrency communities as I am with my real estate investing and my real estate communities. I'm basically living two lives, so to speak. And the last few weeks has been very focused on crypto after kind of ignoring it the month of October, when I was kind of traveling and get some real estate deals closed. So I got involved in 2016 with crypto. So I was lucky. I wish I would have loaded up, but I bought one Bitcoin back in 2016 when it was at $600. Obviously, I wish I would have bought 10. So that's done well for me. And I've been very active in crypto communities. I blog almost daily with either crypto or stock market related content. I'm part of a social media site that's tied to a cryptocurrency. It's called Leo Finance. So I blog on there every day. I earn crypto by blogging. Yes. So on top of like buying in and trading and investing, I also earn it from creating content. So it's pretty cool. So yeah, this market I've watched go through the mania phase in, 2017 into 2018, see the bubble burst, see the whole bear market, and then see the industry mature and become more and more legitimized, more available to the everyday user. It's still not easy though. I have a couple of real estate buddies that wanted to get into crypto, and I'm not even kidding you. I spent a good 1 to 2 hours on like 4 or 5 Zoom calls with them, getting them set up, getting them to do it, what they wanted to get into. And I mean, we did more than just the basic, buy some Bitcoin, thing. So that's why it was more involved. But the point is that it's still not user-friendly enough. Anyone that's, knowledgeable about crypto, it seems easy, but and I keep telling like all like the hardcore crypto people, I'm like, listen, until it gets to the point where people can basically like click a couple buttons, it's not going to be completely mainstream. Like it needs to be as easy as like going on your PayPal account. You know what I mean? Like, so, which apparently PayPal's offering crypto now, but it's actually a derivative. You don't actually own the cryptocurrency. So I've watched this industry evolve, and the biggest takeaway from this should be it's more about the blockchain technology that runs cryptocurrency and not crypto itself. That really is the technology that's not going anywhere. It's already being implemented by a lot of major, global corporations. It's a very useful technology, and ironically, I think the best thing that could happen to real estate is if chain of title, real estate title, deeds, all that went on a blockchain, because it would make closing so much cleaner. You would get rid of all these title issues because it would all be on the blockchain. You don't lose it. It's immutable. And it would make everything much more streamlined and make closings, in my opinion, much more just less pain, so to speak. At the same time, it might put a lot of closing attorneys and title companies out of business. So I'm sure there's going to be a lot of fight, and it won't be getting used for real estate chain of title probably in our lifetimes. But it really is. That technology is just really great when it comes to anything where you're recording things, where you're tracking things. And companies like IBM are already implementing it for like logistic purposes and whatnot. So you're going to see that continue to expand. And because of that, I think cryptocurrency is going to continue to expand. Whether or not we need all these coins is another story, because I'm sure governments will eventually do like digital currencies. But yeah, it's been awesome. It's been great to be a part of it, like as it's growing. I own a whole bunch of different coins, and it's cool learning about it, and it's cool to see the impact it's having on society and how I don't want to say it threatens fiat currency, but it kind of does. And I do believe that Bitcoin is becoming digital gold, and I think that it's going to be a store of value. I don't think it's going to be like a currency type coin. I think it's going to be a store of value. And put it this way, I don't see like a kid that's 18 years old right now, when he's like 30 and wants to start like buying some like, risk, anti-risk assets, like, we would buy gold, silver. I don't think they're buying gold. I think they're buying Bitcoin. So that's why I think Bitcoin's going to always stick around, because I think the younger generations are going to use Bitcoin as their store of value, the way, like my generation and older uses physical gold and silver. So just an opinion though.
Yeah, no, it's really interesting. The are you just making a bunch of bets when you're investing? Is it just a case of making long-term bets? I'm betting on this company. I think this company has this technology. This company could be good. Or how do you invest in it? I know you buy. I know you understand. So what is the strategy behind it?
I mean, here's the thing. So if you're just going to outright invest in a coin, I mean, there has to be a clear reason on why you think that coin is going to be worth something. So is it like Bitcoin, where you think it's just going to become a store of value and it's going to be digital gold, and that's why it's going to go up, and because Bitcoin has a finite supply, there's only 21 million coins. So once they're all mined, which we're not far off from, there's only a few million left. Once that happens, it's just like, well, now you have a supply and demand issue. So if it is going to be a store of value, it's going to be like almost like gold, even though you can mine more gold. It's going to become more precious and therefore possibly go up if people value it as a store of value, somewhere to put their money as an alternative investment. But then you also have coins that are more operational, where it's like, all right, what's the use case? Why are people going to use this coin? Why do they need this coin, right? And that's something I keep a big eye on. And then I'm also like, all right, well, is this like a utility token? Is it basically something you just need to transact on that blockchain? And if so, then the value of that coin probably won't go up. You just need it as like a currency to trade in and out of. Why is it going to appreciate? Is there a scarcity issue? Is it something that basically by having more, you have more clout on a blockchain? And that's a whole nother conversation. There's different types of blockchain. There's proof of stake, proof of brain, there's several. So these are things that you kind of have to go down the rabbit hole on. and then kind of decide why you want to do it. An easy example, like Ethereum is a popular one. And the reason people like Ethereum is because of all the third-party apps essentially on it. So essentially they run on the Ethereum blockchain, but they're kind of their own entity. It's just like, the motor is Ethereum, but they're their own thing, right? And since Ethereum has kind of become the go-to for third-party apps, people are high in Ethereum. The price has been going up lately. They've had their second coming with what's called DeFi, and that's basically decentralized finance. And you got a lot of these apps and services that are promoting that run on Ethereum. So it's like I said, it's really a rabbit hole you got to go down. But that's just some like basics in terms of which way to point your compass and what to look for.
That's crazy, man. This is a whole another world that I have no idea.
Yeah, well, so hold on. Shameless plug. Yeah. I have a 21-page Kindle book called Scaredy Cat Guide to Knowing What the Heck Bitcoin Is. That will basically teach you the basics of what a blockchain is and what Bitcoin is, so you can actually be functional enough to, buy it, sell it, and like put it in a wallet, which is kind of like the basic functions of it. So I'm happy to send you a copy if you want to actually get a little knowledge on crypto.
Awesome. Yeah, and we'll put the link in there if anyone of the listeners wants to sign up and get a copy of that. I'm sure it'll be helping everyone. I bought some Ethereum a long time ago. I bought it when it was like 1,300. Does that make sense?
Oh, no.
Yeah.
One of these stories, I already see it coming.
But it was, luckily, I bought it for like 600 or something like that. So it wasn't crazy. I didn't put 6,000 or anything like that. But I got caught up in the hype. And this is what I should have known.
FOMO.
Yeah. And everyone I was talking to was, when everyone's talking about buying it, that's the last time you should buy it, right? Everyone in the dressing room, I work for Cirque du Soleil, so we have a dressing room where we make and everything. Everyone in there was talking about trading Bitcoin and trading all these cryptos. And I was like, man, these guys are making money. Everyone's making money. I need to make money. I want to make money. So I went and bought Ethereum, and then like the next day it went boom. And I don't think I have no idea. I haven't checked. This was probably a year ago, maybe 2 years ago. I have
the good news is, as of today, it's just above 600.
Oh.
So depending on where you bought in, you might be back to even.
No, I think I bought it at 1,300.
Oh, you did buy at 13. Oh my God. All right, you're halfway there.
Yeah. Maybe in another about 20 years I'll get my.
Ooh, yeah. I remember that time, that era, because, everyone and their brother was asking me about it because they knew I was involved. And like, even like we'd go to like, real estate meetups, and half the conversation was about Bitcoin. And it was like, oh boy, like this is how you know you're in a mania. So it's like when everyone's talking about it, and true story, my buddy Pete, who's kind of like a mentor to me, he's a veteran stock trader, like trading coach. We met up for lunch one day, and we're sitting in there, and there was two grandmas in the booth next to us talking about Bitcoin, right? And there was a guy, like a middle-aged man, wearing a Bitcoin T-shirt, right?
Oh my God.
And he leaves his table, and as he's walking by, the grandmas like stop him, start talking to him, asking like, oh, when should we sell our Bitcoin? I looked at Pete, and I'm like, that's the top of the market. And sure as shit, like 3 weeks later, Bitcoin like almost hit 20, and we came crashing down.
That's crazy. Yeah, that's so funny when grandmas are talking about Bitcoin. Yeah, that's a big clue right there. But that was a lesson to me. Thankfully, it was only a $600 lesson, and if it's nearly halfway, I've still got 300 in there, so I haven't necessarily lost that much. But it was a lesson to me to for one, don't pay attention to what everyone else is doing. That's the last thing you want to do, right? And also, don't invest in something you don't understand. I didn't understand it. Like if you're going to invest in something, make sure you understand it. That's why I like real estate. It's really simple for me to understand. Now, of course, there's complexities and sophistications and stuff like that with it. But ultimately, when you're buying rental real estate, the idea is you buy it right, you get a good tenant in there, and like you said, you enjoy the cash flow, you get the debt paid down, hopefully you get appreciation, you get the tax benefits, and you get to use leverage as well to buy it.
Yes.
Right? So it's just simple and makes sense to me, done right? So that's why I'm all about real estate. So
I want to give you credit though, all right? Your crypto experience, all right? You did it right though, because you weren't like, there were stories about people like taking out like equity lines on their house and like throwing it all into Bitcoin. Like, no, like what you did is what you took. You basically took fun money. You took speculative dollars. You took money that like you would basically take to the casino. Like, so, and that was what I preached to, my friends that like, I'm like, listen, if I help you buy Bitcoin up at these prices, like it's Vegas money. That's it. It's like how much, like if you went to Vegas with me, how much money would you take? 1,000? All right. That's how much you're allowed to put in the Bitcoin. And that's literally how we treated it. And, and I'm glad we did it that way because otherwise I would have felt horrible. So credit to you for being still like, you're like, all right, this is speculative and yeah, it could make some money, but it also could lose. So let me just put in speculative money. And that's prudent investing. I mean, you got to diversify like that and you got to, put money appropriately in the buckets that you go in. So, credit to you for not doing anything stupid.
I don't know if I deserve any credit whatsoever for that, but I'll take it. So let's dive into the real estate. That's really interesting to me. Your first investment was in 2014?
Yes. I bought a 3-bedroom townhome in South Florida. It was for the most part turnkey. The irony is it was kind of ass backwards in that I had a tenant before I had a property.
Okay.
So how this happens is my good buddy, his dad was renting a home that was being foreclosed on because I guess his landlord wasn't paying the mortgage. So I was watching football with him and his dad, and like when he told me that, this light bulb kind of just like clicked, and I was like, if I buy a 3-bedroom place, would you rent it from me? He's like 100%. So that's what I did. I found a little, 3-2 townhome with a garage, similar to what he was living in, and it just essentially needed to be repainted. And I think I had to put in like maybe like a new range microwave or something. It was pretty turnkey. I bought it on the MLS. I mean, I really didn't know much about real estate. I just knew finances. I knew, all right, the rent coming in needs to be higher than my expenses. I didn't know anything about allocating for maintenance, for vacancy. Like I didn't know any of that, So a guy that I played basketball with, he was a real estate agent. So I was like, hey, can you help me out? So it was just straight, like total retail newbie. And, we found the place and, my buddy's dad moved in. He was the only tenant I had in there, which is nice. I know they say you don't, do business with friends and family. But for the most part, it went well. He's a good guy, but he's an interesting character. So there was definitely some late rent payments and some stories here and there. But for the most part, he was good, low maintenance. And in the end, always ended up getting the rent to me. And so I held that property for 5 years. And the only reason I sold it is because the appreciation of Florida was awesome. And I started investing in other areas. And basically, I wanted to diversify because everything I owned at the time was in Florida. And I was like, all right, I'm in a very much appreciation boom bust market, like Southeast Florida. I want to get into some cash flow markets. And then that's when I started investing out of state. And I sold that townhome, booked those gains, and used that capital to start investing in cash flow markets, in other states to be able to diversify my portfolio a bit.
How much, if you don't mind asking, how much did you buy it, and then how much did you sell it for? Did you make a good?
I bought it for $166,000, and I sold it for $251,000.
Okay, nice.
Oh, and hold on, sidebar. During that 5 years, I actually did a cash out refi on it as well that I used to put as a down payment on a 2-bedroom townhome I bought in Florida. So yeah, that property definitely helped get the ball rolling. I pulled, when I did the cash out refi, I pulled, I think it was $35K out of it. So it worked out pretty good, being able to kind of sell it for the profit I did, on top of the fact that I already pulled out $30K 2 years earlier on a refi, which sort of doesn't make sense at that point. Cause it's like, if you do the refi, you need to kind of hold the property longer than that. But I was like, screw that. I got capital. I got too much appreciation. I can put this money to work.
So then, which market then did you go to from Florida?
So right now I invest in like the middle of Massachusetts, kind of like an hour to 2 hours away from Boston, because the prices in Boston, I might as well just be trying to invest down in Miami. That's been where I've been pretty busy the last like 2 years or so. And then also like mid Pennsylvania. So kind of these, I don't want to call them suburbs, but I also don't want to call them rural. They're kind of like in between, they're like suburbs with a little extra space. Um, these have been like these cash flow markets that have basically treated me well, and where numbers work, and where I've even been able to find some deals on the MLS, in addition to the off market. So those are two areas I've been active in. I was looking a lot in South Carolina, around Greenville, in that area. Nothing ended up coming together. My boots on the ground partner ended up relocating back to Florida, so that kind of took the wind out of those sails. So the theme is, I generally like to have a local boots on the ground as a partner. Makes life a lot easier. Doesn't mean you have to do it that way. I mean, property management, it's a beautiful thing. But for me, I guess being a scaredy cat, I like to have a little more, I guess, control or someone I trust there. So I've been able to do it that way thus far. And part of that, though, is through networking, building relationships with people, because case in point, the people that I'm partnered with in Pennsylvania, like I only know them a couple years, and I actually know them through cryptocurrency, ironically. So it's about networking too, to find those boots on the ground. It doesn't have to be like, like I'm spoiled with Massachusetts. It's a lifelong friend. So that was kind of easy. So it's just personal preference.
Yeah, that's a smart way to do it, though. I was going to ask how you did it in these different markets, because, investing out of state, for sure, 1,000,000% can be done. I'm doing it myself, and I know plenty of people that are, but it can go wrong, right? If you don't know what you're doing, and there's a lot that can go wrong, right? Contractors can be doing it. If you're not there checking up on their work, if you're not, checking up on the property manager, right? All that stuff can kind of go wrong. There's a lot that can go wrong if you're not there on a regular basis. But, by you're mitigating your risk, right? If you have a partner that that you trust, that you can work with, they're there all the time, and they can do that work for you, and you can work with them. So I think that's really smart in what you did with that. What does your current portfolio look like?
So I have, what do we got? We got 7, 8. I have 9 rental units right now. We did a flip. I finished flip in Massachusetts recently. I did another flip down here, and I've actually wholesaled a couple deals in Florida, because I have good wholesalers that I found through networking, but I stopped buying in Florida for a while. So they would bring me deals, and I'm like, well, hold on, this is a good deal though. Let me see if I know someone that wants to buy it. I'm happy to make money for connecting people.
Yeah.
So I've been able to do that as well. So yeah. That's where I'm currently. The goal is to continue adding more units to the rental portfolio, between what I have with my partners, what I have just personally myself. And it's funny, I keep telling people like I'm not a flipper, but then I occasionally just keep falling into a flip. If the numbers are too good, I can't say no if there's money to be made. So and there's one that a wholesaler / student of mine actually brought to me in Massachusetts that we're considering doing, but I just don't know if I want. I'm like, I want to get rental units, not flips.
Right. Well, you can use the money from the flip maybe to buy some rental units.
Well, and that's the goal. So an example of that is the flip that we actually did in Massachusetts with my partner up there. We closed on that. We sold it it was mid-August when we got out of that. And the profits that we actually made from that flip, we used as a down payment on a 4-family off-market deal that we found actually through a wholesaler that I networked with up there, that we finally closed on last month. It got delayed. We were supposed to close in September. There was an issue with the title that just took way too long to clear up. But so like to your point, exactly, you take those flip profits, you roll it into a multifamily rental.
Yeah. It's I've started doing a similar thing. I was like you, I wasn't keen on doing flips, especially myself. I didn't trust myself. I think, I was just, there's so much that can go wrong, I think. And, that scaredy cat, I guess, right, in me kind of had that going on. But then I partnered with some good people, and, we're in the process of doing one now. So it's a good way to turn money, I think. If you find a good deal that it makes sense, you have a good team, especially now, if you don't, with the market, right, we don't know where it's going to go. If you're able to churn some money and keep turning it a little bit and grow that equity that you have a little bit, then you can eventually buy some more rentals down the road.
And you made two great points there. You partnered up, right? I mean, I tell people that all the time. I'm like, listen, there's power in partnerships. And like, if there's something that you feel like, you're either, weak in or you don't have experience in, partner up with someone that is well-versed in that, or at least has some experience. I'm like, because I'd rather partner up on a deal than not do a deal at all. Right. So good for you for being able to find partners that could essentially push that needle forward for you,
Yeah, and it was luck, like a bit of luck as well, kind of like you said, like these things kind of fall. The more you network, right, the more these things pop up. And that's why networking is so important. Like you hear it all the time, but it's like so true when you experience it yourself. You create a bigger network and just, you're good to people and you make good relationships. Like stuff pops up all the time, and it's cool to be able to take advantage of that. You said you have 9 properties, right? But how many is that 9 units, or you said you had a four family? How many units?
Yeah, so that's 9 units. So I have let's do the math here. I got the 4 unit. I have a 4 unit, 2 family. It's funny too. The language is different depending on where you are. So like in Florida, everything's duplex, triplex, 4 units. And then when you go like the Northeast, it's 2 family, 3 family, 4. I was just like, so I have to like shift gears depending on like what Zoom call I'm on with what group. But yeah, so 4 family, 2 family, and a single family. Then I got a single family in Pennsylvania, and then I got 2 singles in Florida, right? I think that math adds up. And I want more multi. So I started out in single. My first 3 properties were singles. And then that was another reason I sold the first property in Florida, was that I wanted to start not only getting into a cash flow market, but I also wanted to get multis because, that's where the cash flow is at. I mean, it's like you have to have like 100 single families to make like real cash flow, but it's just so much easier. You buy a bunch of multis, you could have in the end, 10 buildings, but you have whatever it is, 40 units, or 50 units. And that's where, economies of scale definitely comes in. You can make that real cash flow. So I'm trying to expand more into just small multis. That's my bread and butter. I mainly do the BRRRR strategy. I actually did a presentation on that recently for a group in Massachusetts. And it's essentially 2s, 3s, and 4s. That's like the sweet spot. There's one area I'm investing in specifically up in Massachusetts where the majority of the multi-inventory is that. They don't really have much that is above 5 units. So it makes it easier in terms of a lot of like the regulations and the guidelines in terms of, what the property needs to have in terms of like, fire sprinkler. You don't have to deal with a fire sprinkler system when you're talking about a 3 unit, or 2 unit. So it makes renos a lot easier, like the major renos in terms of what you have to, get done and what you have to supply. So I like it because I know it well. I can crush it. I'm not scared at all. As I step up to bigger stuff, those worries and fears start kicking in. And I think that's something that doesn't go away. It's like I've been investing for 6 years now and I still get scared on certain deals because it's just like, well, I haven't done this 7 times over. Like, I don't know, as opposed to you bring me a 2 family. I'm like, if I see the numbers work, I'm like, let's go, wrap it up.
But so you said you're full-time investing, right? And you have 9 units. So those 9 units are able to support your lifestyle and your life?
No, because I don't just invest in real estate.
Okay.
Yeah. So I talk about that a lot. When people talk to me about, oh, you're a full-time real estate investor, I'm just like, yes. I was like, but that's not my only income. And here is my favorite thing that I think I'll share this whole call is that the average number of streams of income the multimillionaires in America have is 7. Mm-hmm. So I have 4 streams of income right now. I need 3 more. You know what I mean? So real estate, that's one of them. The cash flow from real estate's one. And it's like, you need to have multiple streams. So I was able to do that. I was able to go full time when I did with real estate investing on a whole, because I had some cash flow from rental properties. I had, believe it or not, I actually do generate passive income from cryptocurrency. That's like a whole nother rabbit hole. Also, I bought a small piece of a friend's business. Like, what was it? I think it's 4 years ago now. Back when I still had that W-2 and I was bringing in good money, I was like, let me do this. He got a little tight on cash at one point. I was like, hey, I get income. I get monthly income from that as well. That's beautiful. And then I get royalties from my book sales, any coaching I do. So that's really my 4 streams of income. And I'm still looking for 3 more. What those will be, who knows? I mean, maybe I'll build like a good portfolio of like REITs and dividend paying stocks. That could be one, but that's something that I always preach is like, listen, real estate's great. And if you want that to be your only stream of income, that's fine, but you should have more than 1 stream of income.
Yeah. Multiple streams of income. You always hear that all the time. Tell us about your book. Like that's quite the achievement, right? To write a book. It's not every day you meet someone that's written a book. It's not, and I highly doubt I could write a book. I could maybe dictate to someone to write a book, but
that's the way to do it though. Now people do that. They just dictate and then let technology do the rest. I'm a sucker. I'm old school. I can actually physically like type it out on the Word document.
What made you decide to write a book then?
I don't know. I've always kind of been a content creator. For a brief period of time, I was writing like stock market news for like a newsfeed website. I had, like I said, I had a lot of different jobs, some fun jobs in between, all of it. But so with that knack for writing, and then I mentioned earlier, like I'm involved in like that social media crypto site, the Leo Finance. What I was doing is I was writing posts on everything from crypto to stocks to real estate. And then I started to realize, I'm like, every one of these real estate posts I write is content for a book. And it was always just something I don't know why I wanted to write a book. It was just something I wanted to do. I just took, all these blog posts I was writing and I basically, streamlined it and, added to it and turned it into a book. And, these days you can self-publish on Amazon, it's pretty easy. So I did that, and I look back on it now, and I want to write a second edition because I wrote that in 2017. So I know so much more now, and obviously even just the writing process I'm better at. But it's really it's a newbie book. It's for that first time buyer, that first time real estate investor. It goes through some of the basics of understanding, a sales contract and what to look out for in terms of just understanding the contingencies. Understanding the closing document and what to expect at closing. And that was really, to be honest with you, that was the big motivating factor and why I started the whole Scaredy Cat Guide brand. Was that first property I actually bought, my closing experience was terrible. Like I didn't know what I was doing. I'd never bought a property before.
Yeah.
And it was just like the real estate agent I was using kind of like disappeared. I guess he had like hurt his foot allegedly or something. I don't know. The mortgage broker, like, pulled a Houdini. Like, I got to the closing table and it was like me at the closing table by myself, first time, no idea. No one, like, I didn't get wire instructions or anything. Like, the only reason we actually even closed on time was because the seller's agent was an absolute bulldog, and she like carried the whole thing to the finish line, which sure enough, I saved her number and hit her up a handful of times going forward. But I just remember I bought my first my first investment property before I bought my primary home. And, that should have been like the proudest day of my life. I just bought my first investment property. And I remember walking out of the title company, like furious, like angry, like feeling like I had no idea what was going on. And that, like, I just got like left at the altar basically. And so that was actually a big motivator for me writing the book. Cause I'm like, I don't want anyone to feel like I just felt like when you close on your first property, that should be one of the happiest days of your life, not one of the most angry days of your life. It was a hodgepodge. It ended up getting done. The seller was really cool about it because he let me literally I planned on storing some stuff in the garage because I was actually moving out of my apartment into another place. And he let me put some stuff in the garage, even though we weren't technically closed yet. And so, it was just an interesting experience, and I just felt like the emotions were the opposite of what I was supposed to be having, and it really became a catalyst to writing that book to share almost that experience, or basically to share how to not have that experience, because you want to use resources, right? You want to use agents, you want to use lenders, but you still need to understand enough the business to know if they're doing their job. And that's really what the book teaches you if you're new, is like, all right, here's enough of an understanding so you can basically play coach if you need to and know if people are getting the job done or if they're fumbling the ball. So, and that's really where the motivation came from.
That's awesome. I think everyone should read that. That's going to get started. I think. Where can they find the book? What is it called and where can they find it?
It's Scaredy Cat Guide, Investing in Rental Properties. You can find it on Amazon. There's a paperback and a Kindle version of it. And like I said, if you're new or maybe you only have one property under your belt, you can definitely get something out of it. I definitely talk about the management side of investing in rental properties, and even how to like vet out property managers and things like that. So it's a good blueprint, and that was the goal.
Yeah, I recommend anyone starting out should definitely go and read that, because it's a lot of help to have those kind of resources starting out. Now, this show is called Wrestling with Real Estate, so I like to use some wrestling related real estate questions, even though the first one isn't necessarily that. The first one is, what would your wrestling name be? If you picked a wrestling name for yourself, what would it be?
You know what? And it's actually, it works because, you had just like a regular person name.
Yeah.
So like, there's a name that's always been in my head that I thought was cool if I ever needed a stage name. And it's pretty simple. It's just Jason Reese.
Jason Reese.
Yes, Jason Reese.
Got a nice ring to it. Okay, Jason Reese. Reese is actually kind of a Welsh name, I think.
Perfect.
Yeah, even better. Yeah, Jason Reese. Cool. Well,
I have to grow my hair out.
Yeah, you got pretty good hair, man. And you got for anyone who doesn't see the video, he's got pretty well manscaped as well. Look.
Yeah, well, a random factoid. I actually had my hair as long as yours at one point. Way back in 2000 and whatever it was, 7, 8. I was a fake rock star for a while.
Really?
Yeah. If you remember the video game called Rock Band, I toured the country promoting it, and we literally put on gigs at major colleges. We actually did UNLV. That was our first stop. We went all over the nation, and we had a trailer, like a 53-foot trailer that opened to a stage. And we'd set up the game, and we had TVs that would face the crowd, and basically people could come up and play the game one time. It was before it came out. Yeah. But we had to like put on a show and kick it off, and I was the MC. So I like to joke and say I got to be a fake rock star.
That's awesome. How did you get to live kind of a rock star lifestyle, or was it just boring and the hotel?
No, I mean, we burned the candle 24/7 because like we still had to work, and since we weren't real rock stars, we didn't have roadies, so we were doing all the setup and the breakdown on top of doing the gigs, on top of doing the traveling, on top of, I mean, let's get real, we were doing a bit of partying as well. I mean, we were going to colleges. I mean, luckily I was still in my late 20s then, so it wasn't too creepy for me to be there, but so yeah, we might have partook in a few parties or two. So
that's awesome. That must have been so much fun.
Yeah, it was a good time. We made good money too, so I can't complain. Wow. That showman lifestyle. So I got a brief glimpse of it for about 4 months. It was 24/7 living on the road. I made lifelong friends. The guys I was on the road with, I'm still friends with to this day.
Awesome. That's cool. That's a cool story. So every wrestler has a signature move or a special move. What would your special move be in real estate, you think?
So when it comes to real estate, and I guess, my little link to the side of my head here gives it away. It's the analysis. I'm very much a numbers guy. I get rid of my scaredy cat emotions by relying on the numbers. I mean, that's why I kind of created the process I have, because I was just too scared to pull the trigger when I first started investing. I would let good deals go by. So I forced myself to just rely on the numbers to take the emotion out of it. So essentially just badass analysis in order to buy right. Because the bottom line is, when it comes to analysis, it's like anything else. The better quality inputs that are going in, the better outcome you get, and in the end, it's all estimation, so to speak, but, the better quality of information you have, then the better, result you're going to get in terms of how on point that analysis is. So I'm very particular about that. And you had mentioned it earlier about real estate. Like, you don't have to be smart. Like, that's what I love about real estate. Like, I met a guy up in New York who literally, like, he was just like this old school Italian, like, Goomba type of guy. And he's like, he was worth millions. And he told me, he's like, look at me. He's like, I'm not smart. He's like, real estate's the way to go, dude. He's like, good for you. Like, and I'm looking at this guy and I'm like, no one would ever look at this guy and like think he was smart. Like, I was like, I'm glad you said it because like it really stuck with me. Like, he was just like that total like stereotypical New York Italian guy. I was like, and then this guy was like worth millions upon millions upon millions. And I was like, real estate's where it's at. Like, you really do not, it does not take rocket science. It's so much easier to understand than trying to like trade options or Forex or, you know, so, deal analysis is where it's at for me. And I love the fact that it doesn't take rocket science to be good at analyzing deals.
Yeah, the numbers will tell you what to do as well. That's what's cool about it.
Yes.
For the most part, right? You know, it's not so much emotion. If you can take that emotion out and rely on the numbers, it'll kind of tell you what to do, which is cool. So what's been the biggest body slam you've taken in your investing career, real estate investing career?
I mean, outside of regretting all those deals I passed up on early on because I was too scared, talk about, I mean, South Florida in 2014, there was still home runs, you know, but outside of that, let me think. It was probably on a flip that ended up being way more work than expected. It was the Northeast. It was, you know, I wasn't used to dealing with the plight of winter and buying like an REO home that had been, you know, winterized and had been vacant for over a year. So basically what happened was the plumbing was so shot and we bought it in February and it's just like, we couldn't even turn anything on because we had to wait for the first thaw of the season. You know, like, you know, the plumber was just like, you're better off not turning anything on. He's like, cause you'll do more damage. And so long story short, like it was such a hodgepodge of plumbing, like that had been like just jimmy rigged over the years. When we first looked at it, we really thought we were just going to replace a handful of things, make some updates. We ended up just realizing, you know what? Screw it. This is more trouble than it's worth. We ripped out everything. So we did brand new plumbing and heat, like soup to nuts. So every pipe, every connection, everything was brand new in there. And that obviously wasn't in the plan with our initial budget. So that added to the budget. It added to the workload and it added to the timeline. So that, you know, was a little bit of a body slam that we were luckily able to get off the mat from. We still made good money on the property, but I'll tell you, during the time between that and some other little surprises, it definitely felt like a body slam.
What is there anything you could have done differently, you think?
Yes and no. I mean, knowing what we know now, we would have known like, all right, we're just replacing all the plumbing and heating. You know, back then, I don't think we knew enough. You know, like my partner didn't know enough then. I didn't physically see the property. You know, I saw pictures. Also, being primarily, you know, a Florida investor, I don't deal with that drama.
Yeah.
Like heat, what? I don't know what heat is. What are you talking about heat?
It's AC all year round. Yeah.
Right. I'm like, I got HVAC, like, you know, but so honestly, I don't know if there's anything we could have done different. There is a rule of thumb I have, and it's funny because I'd done a consult with someone earlier today, and I told her, listen, when you do a flip, you know, you can use a percentage, but you know, anything when you're talking about homes that are like under 300,000, I'll come up with my renovation budget, and unless like it's something where I know I'm spot on because like I know everything that's gonna need to be done, and I can see everything, like we're not opening up walls or something where there can be surprises. Most of the time, if there's any kind of wild card, I just tack 10 grand on the budget. So if the rehab is going to be 50, then the rehab is going to be 60, because I don't know many people that have come in under budget. And I can tell you right now, I've only come in under budget one time, and that was on like, it was a complete just cosmetic, you know, anything where you have a lot of unknowns where either you have to open up walls or there's things that you can't see until you open it up, you're going to end up spending more money. Like it's just, you know, so factor it in. I looked at a flip recently. It had a septic system. I hate septic systems, but I was like, listen, unless it was in Massachusetts, they do Title V is the thing, like, for it to pass. I was like, unless the Title V is in place, then to me, it's a complete wild card. And if the whole thing needs to get replaced, it could be upward of 20 grand. So I'm factoring 20 grand into my budget.
Yeah.
So it's just, putting that buffer. That's the only thing I think maybe I would have done different is I would have beefed up that buffer because of the scope of work.
But at least, like you said, you still made some money on it. So it must have been a good deal to start off with, right? And you just came
It worked out well. The ARV was better than we thought it was going to be because I took and that's being conservative can work out. I had a conservative ARV number. So we ended up getting more than that number. So that was really helpful. And that's something to keep in mind when you run your numbers, see if they work at the bottom end. And if they do, then you're in good shape.
Yeah, it's better to be conservative than too ambitious, right? It's better to under-promise and over-deliver than to have a nice surprise when you're like, oh God, I lost money on this one.
Yeah.
So was there a moment you were standing on the top rope getting ready to jump, but you were too scared? What was it and how did you overcome it? Coming down with that.
Oh, man. I mean, so there was moments obviously where, I probably was like on that top rope and, the setup was there and I guess maybe I saw the guy on the mat start moving his shoulders and I was scared he was going to roll out of the way before I reached the ground and I didn't jump. So, that was more so early on in my investing. There were some deals down here in South Florida where I didn't know what I know now. I wasn't familiar with hard money. And there was one deal in particular that I remember because it was a single family home in a neighborhood that I'll basically never, ever be able to buy in again. And this was probably 2015. And it was a pretty easy flip, to be honest with you. But at that point, I pretty much was kind of like either financing things myself or, I wasn't buying major projects. So for this one, I needed to take on some hard money to get it done. I wasn't familiar with hard money at the time. I was kind of scared of it because I felt like it was like high risk and it's high interest and God forbid if something goes wrong. And it's like, then I'm gonna be like paying out of pocket just to like pay this loan. And basically we just got super scared, like, a newbie scaredy cat does. So I slow danced on getting the hard money approval, like getting the proof of funds from the hard money. Like I totally was just indecisive, slow dancing on it. Kind of just standing on that rope, like, all right, I should jump. It's set up. Like, all right, why is my body not jumping? So what happened was by hesitating those couple days, by the time I got that lined up and then we got the offer in, at that point, it was too late. Someone else already climbed the other buckle and took the leap. So it goes back to, and why I became, more focused on the numbers. It goes back to, trust your process, trust your numbers, trust that, you got that property settled down on the mat where it needs to be and you can make that jump. So I'll never forget that one. It's the one that got away.
It's all good. It's all good though. You like you said, you learned your lesson from that, right? And you just kind of got to trust the process going forward.
Yep.
Well, Mitch, man, thanks, man. This has been a really fun interview, man. It's been really interesting. Like, obviously, you're focused on real estate investing, but it's really interesting to hear you talk about those other types of investment, right? And I think, for most people, they're interested in real estate, but it's good to know that there's other investments out there and there's ways to do it. So I really appreciate you sharing that as well as everything else associated with real estate. But before we go, where can anyone find out more about you? Plug your book, plug your calculator, plug anything that you have. And
put in all the plugs.
Yeah, put all the plugs. And people reach out to you as well if they want to talk to you more personally.
Yeah, so obviously the link there, the scaredycatguide.com/real estate, that will lead you to the property calculator. So I have a basic rental property calculator. It's free to use. So if you're not running numbers, feel free to use it. You know what I mean? Like, I'll openly admit, I created it for myself because I was tired of dragging my computer around all the time. So I was like, let me get this on my website. So, now everyone else can use it as well. So feel free to run your numbers. You can find me obviously on my website. People can email me at info@scaredycatguide.com. I'm also out on Facebook, Scaredy Cat Guide. And then obviously, my name, Mitch Jaworski. So, feel free to reach out and network. You should always be networking. That's the biggest thing I've learned about real estate. I really embraced it the last few years, and I've watched things just, kind of take off for me. And Barry mentioned it earlier, through his networking, how he's gotten some opportunities. He said luck. It's not luck, it's networking.
Yeah. No, it's true. It's true. Like luck is when hard work meets opportunity, right? That's
yes. Love that quote.
Yeah, so true. Well, cool, man. Thank you, man. It's such a fun interview, man. I appreciate you giving the time. And
I appreciate you having me on, man. It was great talking to you.
Cool. Well, have a great rest of your day, man.
All right, Barry. Take care.